I don't know if you've noticed, but it's officially 2022, a year that looks like it's going to be full of conversations about the Metaverse, Web 3.0, more NFTs, and a potential downturn in the market after a pretty crazy bull run. But before we talk about that change, we do want to take a look back on why 2021 was the best year to make gains in the stock market. The S&P 500 alone was on track for an 87% gain since the end of 2018, which would make it the best 3-year performance in more than 2 decades. And the overall performance was sitting at about 29% for the year of 2021, which is huge. A part of this is that the S&P 500 is really top heavy, and it's seen a big jump driven by the growth stocks. Now, this is proven by the fact that the top 5 companies in the S&P 500 have been responsible for 51% of its growth since April 2021. Now, with these huge returns, people are starting to wonder if after a 13-year-long bull run, and with the addition of so much stimulus money in the system, is it coming to an end?
So throughout this past year, growth stocks have been killing it, specifically big tech. And I mean just absolutely dominating the market. In fact, if you didn't own any big tech or had very little big tech exposure, you probably underperformed the market by a lot. And we'll talk about this more in our next video when we dive into Steph's investment portfolio performance for 2021. Also, there's just so many new lanes that these big tech players can jump into. When we look at companies like Google, Apple, Amazon, Microsoft, Meta, they're creating more and more of an impact on each other. They're so powerful that they're dominating one market and then leveraging that power to dominate other markets. Now, to add another piece to the puzzle, the pandemic benefited big tech in a completely different way. They were cutting costs left and right. Google itself saved $1 billion just on these costs alone. They then used those savings that used to be needed to keep the lights on areas that allowed them to grow more, like Amazon spending $50 billion on new warehouses and cloud computing hubs. They were also acquiring a ton of other companies. Amazon bought Zappos, IMDb, Twitch, Apple bought Beats Electronics. What we think is really interesting is that people originally thought that these companies would perform really poorly based on the economic conditions. So with the Fed printing money left and right, with inflation fears just running wild, basically what's been happening to all the smaller growth stocks. If you've taken a look at them, they've been performing so poorly. Companies like C3AI, Palantir, they've been on the decline. And once again, this just shows us how big and powerful big tech already is.
Now, last up, and partially fueled by both Wall Street bets and the central bank's printers set to auto, crypto also had a really crazy year. If we think about all of the highs and lows that Bitcoin hit, if we think about all the alt and meme coins that came out, from Dogecoin, always have a hard time saying that, to Solana and Cardano, there was just a lot going on in the crypto space. By November, Bitcoin had hit its all-time high of $69,000, with acceptance from some major companies like Tesla and MasterCard. And a lot of people would argue is that 2021 was the year that Bitcoin finally hit the mainstream, with people who used to invest in mutual funds for years and years actually jumping in and tasting some of the crypto volatility firsthand. It really is crazy to see this landscape change so quickly, and a stat that we thought kind of summed this up pretty well, and that's really crazy, is that nearly half of millennial millionaires have at least 25% of their portfolio in crypto. Now, this is obviously going to create a bit of a generational divide in wealth, because a lot of these younger people who hopped in on this trend early of getting into crypto, they're making their wealth a lot faster, and it's completely new space for the traditional wealth management people. Now, moving away from crypto, there was also a ton of shade being put on NFTs at the beginning of the year. People were thinking, why would I spend any money on a pixelated JPEG, and what the hell is a CryptoPunk? But by the end of 2021, almost $41 billion had been spent on NFTs, making the digital artwork and collectibles world almost as valuable as the global art market, which is really crazy. There's also a lot of momentum in the NFT space when more celebrities and just public figures got involved too. You might have remembered, or maybe you haven't heard of it yet and we're letting you know now, but Gary Vee got a lot of big YouTube creators together, think Mr. Beast, Logan Paul, some of the big creators like that, on a call to talk about how they should get in on CryptoPunks, which is kind of low-key market manipulation, but what can you do? To wrap all of this up, it pretty much felt like everyone was against the JPEGs, and then in a span of a few months, everyone wanted in instead. And what's interesting here is that thousands and thousands and millions of dollars were made, and it could be easy to feel like you might have missed out, but this is only a space that's going to be growing more and more into 2022.
Okay, so now we obviously can't talk about the 2021 stock market without mentioning the impact of Wall Street bets and the meme stock craze that was pushed by all the retail investors.
GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
This was the unexpected side of the market. Obviously, growth stocks and COVID kinda came together at the same time, but when we're talking about meme stocks, this isn't really something that anyone could have predicted. Basically, we had the biggest surge of new retail investors ever, and what these new rookie investors were doing is that they were entering the market at all-time highs for the very first time. And what was happening is that they were now turning to different sources for investment information and ideas, specifically Reddit and Wall Street bets. This ended up being a pretty risky investment strategy. I mean, we saw a lot of retail investors jumping in and jumping out at the wrong times in the market, and they lost tons and tons of money. What's interesting though is that despite some huge quarterly losses, GameStop and AMC are still up pretty high for the year. We're seeing people from both sides make money. If we take a look at AMC's top execs, they've been dumping shares left and right. And even though that hurts the stock, it's made them millions and millions of dollars. The reason we're even mentioning this in this video, despite so many retail investors losing their money, is because this was truly a once in a decade type event, where had you bought in early and you knew about it, you would still be up 600 to 1,000% on your stock. The chairman of Interactive Brokers says that he doesn't believe that there's gonna be one single event that's gonna destroy all the meme craze, but instead, the excitement's slowly gonna fade one by one, stock after stock, and eventually companies that are meant to die will eventually just die out. At the end of the day, failing companies are failing companies. Empty hype can only last so long, right?
So now we know that the pandemic's been good for those big tech companies, but it's impacted the market and the overall banking system in other ways too. When all of this originally hit in 2020, there was a big halt in spending when everyone was losing their jobs, staying at home, and weren't sure of their futures. And the problem with this is that our economy literally relies on money going in and out of the system. So at this time, the central banks obviously wanted to incentivize people to spend, and they did this by printing money and then giving it out in the form of stimulus checks, PPP loans, and COVID benefits in Canada. Overall, the central banks and the Fed tried to keep things afloat, but they didn't really fix the problem. They more so just delayed it and kept creating these other little problems. Basically, they had to keep printing money because we all know COVID didn't end quickly. So every time infection rates went back up or there was a new variant, we were in the same situation again. And the unintended result of with people having so much money in the economy or the markets is that prices had to go up, which is basically inflation. Now, as the year 2021 went by and there were more outbreaks and more variants, like how we ended the year with the highest number of cases yet, what's pretty interesting is that the financial markets responded differently than they did at the very beginning, like in March 2020 when they crashed. Instead, throughout 2021, they kept going up.
To wrap things up as we jump into 2022, we're going to be covering a bunch of this stuff in our quick take segment. And if you don't know what that is right now, trust me, you're going to find out real soon. But basically, the central banks, in particular the US Federal Reserve, has signaled that they're no longer going to be pumping money into the system. So for everyone who's gotten used to those crazy returns in the market, by March, interest rates are going to be going back up, which is going to make money more expensive for people and companies, and it's going to slow down the excitement around stocks. What's going to happen is that leaving your money at the bank is going to start to look more and more attractive because the market's going to be delivering lower and lower returns. And hopefully through this process, it's also going to cool off inflation and those rates are also going to go lower. Anyways, we hope that you guys enjoyed this video and hopefully you felt like you got a better understanding of what happened in the markets in 2021. And hopefully you're also excited for all the new content that we've got coming in 2022. Our first quick takes video that I kind of teased earlier drops this Friday, where me and Steph basically just sit down and we have a casual chat about money, investing, and other topics. So make sure you're excited for that one. In the meantime, if you haven't already shown us some love down below with a like, make sure you like the video. It helps out the channel a lot. And if you haven't already subscribed, make sure you subscribe right there in the corner. And in the meantime, also check out some of our previous videos right there. Next door, we will be back. You know the vibes. Let's go 2022.